Here's a cash flow analysis tip for your business on how to use your cost of goods sold to track cost increases and increase or maintain your business profits. What exactly is cost of goods sold? Cost of goods sold categories in your accounting are for things your business buys specifically to deliver your type of products and services, as opposed to regular expenses like utilities or phone service that every business owner pays. Let's take a veterinarian, for example. A vet's cost of goods sold categories include things like biomedical waste removal, lab fees, license fees, medical supplies that are not for resale, products for resale, and vet professional relief labor. These things are not something that a bakery or a dry cleaner company would buy. Okay, so here's the formula to get the percentage your cost of goods have been running to get a benchmark. We take a profit and loss statement for the prior year to get the total income and total cost of goods sold. Then we use the formula of total cost of goods sold divided by the total income equals a percentage. That percentage is the average and becomes the benchmark for future profitability. In this example, our benchmark percentage is 44.22%. Now, at the end of each quarter, we pull a quarterly P&L and we do the same cash flow analysis calculation for profitability to see if our costs are within an acceptable range in comparison to the benchmark, or if we see costs creeping up. So let's look at first quarter of the next year. Here you can see that in the first quarter, the cash flow analysis calculation shows the cost of goods sold was right around the benchmark at 44.31%. So it's okay. Now we analyze second quarter, and we see that the cost of goods sold percentage is creeping up. If you, as the business owner, don't immediately know why that would be, then the first thing you should check is if any of your suppliers raise their prices without you being notified. If that's the case, you may want to pass that increase on to your customers on that supplier's items to maintain profitability. If you found suppliers' prices have increased and you've already raised your prices to compensate for that, and your costs still continue to rise in relation to the benchmark, as illustrated in this third quarter calculation, then you need to look into two areas, waste and theft. It's not uncommon to find both waste and theft of supplies in a business, and while each one may be a small amount per incident, over time it can eat away at profitability and cause a business to become cash poor and even go into debt to cover losses. You can use this same calculation on your expense items too, so you're aware of cost creep in areas like office supplies or postage. Use this cash flow analysis calculation to keep your costs under control and your profitability high. If you found this video helpful, please give it a thumbs up like and subscribe to our channel to get notices of new videos. To learn more about cash flow management and how the Cashflow Mojo software can help you with your cash flow analysis and planning, visit our website at www.cashflowmojosoftware.com.